Here is your Bull and Bear Stock of the Week. This week we're going to talk about a multi-line insurance company and an agricultural company as our Bull and Bear of the Week with Shiraz Mian, who, as always, is going to give us the lowdown on both of these companies. Now, Cigna Corporation is that multi-line insurance company. Insurance, I guess, one of the areas that's doing okay this time, huh?
That's right. And they have, broadly, I would put them in the healthcare or the managed care end of the market. And given all the turbulence that's going on in the stock market, Cigna gives you a mix of both lower risk, good defensive attributes, and a decent amount of growth as well. And those are some very desirable aspects in a stock in this type of environment.
And so that's how they're able to stand out from the competition?
They do. So it's the broader healthcare group in itself has fairly defensive attributes, as I mentioned, and then within the health management group, Cigna has less of an exposure of some of the upcoming riskier issues that the group as a whole is facing. We know we have budget issues at the federal level.
Right.
The Medicare is one of the items on the table. And then there is the lingering issue of the healthcare reform and its impact on the industry. So Cigna as a whole has the least amount of exposure to those headwinds that the rest of the industry is facing. And broadly, Cigna has been kind of an underappreciated name in this space, primarily because they had some balance sheet issues. Mm-hmm. They also had some pension liability issues. But in my view, the positives in the story trump those relatively negative aspects. They also have a fairly diversified business mix, as like you mentioned, the multi-line insurance. Mm-hmm. They have a fairly strong and robust international growth business as well, with about a fifth of their bottom line coming from international, and very solid organic growth, and they are adding to that through timely bolt-on acquisitions. So broadly, a very interesting and suitable pick for these types of times.
Well, agriculture is another area that's doing well, but this agricultural company doesn't seem to be. Archer Daniels Midland is the bearer this week.
That's right. And Archer Daniels Midland is a very well-run company. It's very well placed in the broader agricultural space. But we have to keep in mind that ADM is at the receiving end for all the positives that's going on in the agricultural commodities space. So it is a processor and a packager of all the commodities that the price outlook for which is very good, whether it's in corn processing or whether it's in oil seeds or whether all the other agricultural commodities that they process, the high prices for those, and despite some recent weakness in those agricultural commodities, the overall supply-demand dynamics of the ag commodities complex remains far more bullish and positive than some of the other commodities. So it's a question of margins. It's a question of processing margins that a processor like ADM has to deal with. On top of that, we have to keep in mind that ADM is the largest ethanol producer in the country. They account for almost 11-12% of the ethanol market in the U.S. And the picture for ethanol is a lot blurry and cloudy than it has been in recent years. The credits and benefits that the industry has been relying on are on the chopping block and may not be available beyond the end of the year. So it's a question about near-term margins. It's a question about the long-term outlook for its key product that, in our view, is weighing on ADM shares and will be a factor in keeping the stock under pressure.
Okay, do you own either of these two?
No, I don't.
All right, if you enjoy the Bull and Bear of the Week feature that we present here, then by all means check out our Bull and Bear of the Day. Each day, 2 new ones for you on our homepage at zax.com. With Shiraz, I'm Terry Ruffalo.